The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the April 9th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope each and every one of you had a wonderful Wednesday. Let's make sure that we have a terrific Thursday. Of course, if you're a golfer out there, hey, even if you're not a golfer, it's Masters Thursday. Nothing like it. Nothing like this golf tournament, so it's going to be a beautiful weekend out there. But here's the key, folks. No matter what, the easiest way to live a inspired life, because that's really what it's all about, right? The idea is to be able to inspire others, especially yourself. You've got to be able to inspire yourself, folks. And the easiest way to do that is to always remember that life happens for us, not to us. Yeah, a little 2x4 exchange out there. In fact, sometimes we got to take that 2x4, whack each other on side of the head there. Now, be careful. Whack yourself, not anybody else out there. But sometimes we got to do that just to remember that the whole purpose is to be able to find the gift in every set of circumstance that life is going to throw at us. That's really our role. That's your role. That's my role. That's the role of the markets out here. We've got to go looking for bulls and bears. We've got to go looking for those circumstances. That's what we're going to do here during the next couple of hours. And most importantly, I want you to know that I'm grateful for your presence here today. Now, I'm here to serve you. That means that you can feel free to pick up the phone, dial on in at 877-927-6648. Of course, internationally, you can call in at 727-445-1044. Hey, even if you don't call in, I know that you're there. Thanks for the cards. Thanks for those emails out there. This is Terrific Thursday. Of course, it's none other than Tiger Financial News Network, Hotel California. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow futures trading down about 29 points, trading at 17,799. S&P futures off 4, trading at 2,072. NASDAQ at 7, trading out at 43.67. That's down nearly 8 points this morning. King dollar on the move again, up 454 ticks, trading out at 98.58. We've got movement in the currency market. We'll take a look at that. We've got some movement in the hard currency market. That's Goldilocks trading out at $11.99. That's down $4. Silver trading off 17 cents at $16.27. Natural gas looks like that's back a bit here this morning. So it's in the process of forming that bottom. Looks like it's not there. Maybe it goes and it tests the swing point low out there. We know we're in the seasonal period here. Today is what, April 9th? April 9th is when when natural gas is supposed to. If it's going to be on schedule, if it's following Stevie's schedule, actually it's not my schedule, it's a schedule over the last 11 years out there, then today would be the day out there. But we'll see. We just use that as a guideline. We've got light sweet crude trading up 91 cents, having a hard day yesterday. It's trading out at 51.33. Hey, I don't know if I've got a data feed problem. I checked a couple different sources out here. Maybe somebody in the den actually has checked a couple of sources as well. But I showed the following. I've got to look at. I had to write this down on a digital pad of paper, I should say. I showed that the number one. Now, this part I know is correct. I show that the Hang Seng closed up 707 points. That's an encore presentation to the day before, where it was up, I don't know, 600 points or something like that. But what I also show, which is pretty wild, and this is where I don't know if it's a bad tick or not, but I checked a couple sources, which are I checked two different sources that have two different data feeds. Of course, in today's day and age, we may be all getting the same data feed from one place. But I actually show that the Hang Seng got up to 28,000. What was it? The exact number was 27,922, which would say that at some point in time, and I wasn't paying attention to this, it would say that the Hang Seng at some point in time was up 1,685 points. Does anybody in the den know if that's the case? As I say, I checked a couple. Look at this. Here's the bar out here. Now, either way, look, if it didn't do that and was a bad tick and it still closed up, 700 points, another 2.7%. I think yesterday was 3.5%, almost 4% out there. That's pretty impressive, huh? Now, if it did get up to that level, it made the 1 to 1.618 overnight. Now, it traded off obviously quite a bit out here. So someone says they saw it up 2.7. Yes, that was the close. The close is up 2.7% out there. The question is intraday. Did this actually trade up to a high of 27,922? Because it closed at, just so you know, it closed at 26,944, and that's a pretty large swing out there. So it's worth one, if the tick is correct. We certainly want to be paying attention to that tomorrow. I am not sure what to take as the meaning on that. Well, other than this, here's how we would look at it. Still another wide-ranging bar, no matter how you look at it. If we just take a look at yesterday's close, I mean, look at the weekly. Let's put this on a weekly perspective, and we're not done with the. Certainly not done with the week, but here's the weekly bar out here. Pretty impressive. Widest ranging bar on a weekly basis that the Hang Seng has seen. I'm just trying to eye this out here with you. And pretty much since looks like October 27, 2008. Here, I'll pull this over so you can see it. Here's another wide-ranging-ish weekly bar out here. That was when it had formed a bottom out here. So in any event, big, powerful move, no question. And we know where it closed, and so forget about whether it was a bad tick or something like that. Very powerful bar inside of the Hang Seng. And at this stage here, we've got to assume that it's breaking out and it's going to make its way up. Well, as long as we're on the week, then put this on the monthly out here. I thought I had it written in on the chart. It's going to make its way up to 30,482 on this next move out here. Again, closing at 26,944. Doesn't mean it does it overnight out there. Doesn't mean you should just simply jump on board on that trade. Maybe a bit too late out there. And anyway, let's go ahead and take a look at world markets as well. As I mentioned, our futures trading a bit to the downside. Let's go ahead and stay in Asia. We had the Shanghai. That was down about 1% last night off 39. Here's the monthly, but let's go back and put this now. On the monthly chart, this has got 46.41 written all over it. Let's take a look at the daily chart, see if there was any real kind of damage. Nah, no damage. Now, it was a bearish engulfing candle out there on the daily chart out here, but, and it's over bought to a large extent. So working that condition up, makes a whole lot of sense out here. Sideways move obviously would be the largest bullish. Says investor floating saying up 20%. Yeah, it's okay. In any event, let's take a look at the Nikkei. Nikkei up 0.75% last night, up 147 points. The Nikkei, as we had noted yesterday, had closed above those doji candles, their resistance back here in the swing points of the March 24th and 25th. It's got 20,094 painted all over it for its next move. That's the 1 to 1 A to B equals CD. Quite frankly, it's got a smaller A to B equals CD pattern that's in play as well right now. Let's go take a look at that. See where we're at in with regard to that. Your A point being down here looks like March 10th or March 11th. We'll use March 11th. I'm not sure which one of the two dates, but close enough. And we'll use as the doji, looks like March 25th, and then the April 1st date. So, yeah. So now we've got two A to B equals CD patterns with inside the Nikkei that say that 20,000 area, 20,119 is the one that just popped up on our screen. So 20,119 to 20,094 looks to be its target out there. Now, let's go take a look at the European markets. The FTSE, as you know, we followed yesterday. We continue to see that the FTSE wants to get over that 69.50. That's the 1990 high. That's the 1990 1999 16-year consolidation breakout move that is underway out here. So it's a big move. We'll see if it can close the week above 69.50, 60. If it can do that, let me put this on the weekly chart. I think that would be the second time. No, maybe the first time. Let's find out for sure. That would be the second time that we would see it close above that level. So the FTSE really trying to break out. Looks to me like that's what it's going to do, and it's going to run higher. The question is, are these markets going to run higher and leave the U.S. markets behind? I mean, we'll go take a look at the DAX right now, up 56 points, about 0.5% out here. Here's the weekly chart inside the DAX. You can see it's really flirting around with the highs. There's nothing here that is bearish looking to us when we take a look at this stock chart. The daily base we know is just working off of a Just simply working off of a overbought condition. So the DAX wants to run the 12,695. So the question is, as we take a look at the again at this chart here that shows the DAX is atop, the FTSE in the UK in the middle, and the S&P 500 at the bottom. Are these markets? Because I should just what happens if I add the Shanghai, the Nikkei, the Hang Seng in here, but it will crowd up the chart, so I'm not going to do that. But, are these markets going to go ahead and leave the U.S. behind? I don't think so. I really don't think that's the case. We haven't done much in 2015. There's no question that 2015 has been the year of the stock pickers out here. And maybe that's really a clue. Maybe that is a clue to both you and I that that's where our real focus ought to be, is not so much in the general indices out here, but both from the short side. So because there are plenty of stocks that are moving down, and maybe that's where your price and volume really comes into play, as well as being the stock picker on the upside of the chart. So maybe that's maybe that's really what the message of the first 3 months of 2015 were for us. Now we're in a favorable seasonal cycle area. That means we ought to at least see an up move inside the market, a continued up move in the market. If we look at the daily futures contracts here in the U.S., just to get a picture, see if all signs are pointed in the go, no-go zone. Well, if you start off with the Russell 2000, we're in the go zone. So go zone meaning we've got the price above its most recent TAS market profile high, old resistance, which we saw close above yesterday. Now so far this morning becoming its new level of support. That support being 1256.37 to be exact out here. If we take a look at its daily chart, we take a look at the wave count. I like that seventh inning wave stretch, that little G count out here. Well, we got to that G count back here on March 18th. That high was overtaken. Looks like it was overtaken on March 20th. Nothing more bullish than a failed bearish pattern out here. These profiles on these daily charts here on my two different systems are different. I'm going to go with the E signal, and in this case here, they're both above the resistance level. But I'm going to go with the E-signal version out here versus what's coming off of my Ninja Trader platform. Either way, with regard to the wave count, it looks like, this wants to move higher. And it's always good when the Russell 2000 is out in front, not pulling the markets up, just simply out in front, because it does the best job out here of just simply creating a nice draft for the NASDAQ composite. So let's go take a look at the NASDAQ composite. Let's go see what its message is out here. NASDAQ composite yesterday doing what? Getting above its market profile. That's just been established for, it looks like, 2 or 3 days out here. Nonetheless, it's up above that box. We know that we had a hammer candle back on March 26th. We know that that was tested 3 different times. Third time is a charm. Well, that charm is that you couldn't bust it out to the bottom. Now you're going to go ahead and try to bust it out to the upside out here. That says that the March 20th level is where the target is for the NASDAQ. So you got the Russell, you got the NASDAQ. Those are the 2 leaders that you want to see out in front out here. And we've got the Dow. What did the Dow do yesterday? What the Dow did yesterday was get back above its market profile low. That should have been support. It failed as support. It should have been resistance. Well, you're back up above that level. Looks like the Dow futures want to get eventually up to 17,927. Of course, they had that hammer candle as well, so they want to make a run for the highs. This is Steve Rhodes with TFNN. I'll be right back, folks. We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures off 10 right now. Let's go out to Martinez, California, to Brent. Brent, thanks for calling. Thanks for holding. How you doing this morning?
Thanks for taking the call, Steve. How are you?
I'm doing very well. You're up nice and early this morning. You are wanting to look at shippers, DSX, Diana Shipping to be exact. Tell me what you're doing, what you're looking at, how I can assist you.
I was hoping you could go back on a 3-year chart to about July of 2013.
Okay. Go ahead.
I see a big head and shoulders pattern that looks like it's coming down to that bottom. I just wanted you to check the volume characteristics if you could.
Absolutely. So we'll take a look at it for you on 3 time frames out here. First is the monthly. Now, we're just into the month of April, but the actual, here's what I'm actually focused in on, which is the July 2012 swing point. And that because that's where price is trading within right now. And the volume in July of 2012 was 8.3 million shares. So far for the month, you've done 2 million shares. That's on the monthly. Now, the low of that swing point is $5.89. We have not seen that low yet get tackled, $5.89. If we take a look at the weekly time frame for you so that you can take a look at the weekly volume on that, because that's really the same swing point that we want to deal with. Now, on the weekly chart, that happens to be a hammer candle. So we like that to a certain extent. That says that when price got down there the week that began July 23rd, 2012, the market found a bottom. Now, there was 3.3 million shares on that week. This week here, you're at 1.3 million shares with 2 trading days to go. What you'd ultimately like to see, I'm assuming you're looking to play this to the long side, correct?
Yes.
Okay. Ultimately, what you'd like to see here in benchmark is you'd love to see a test of 589, preferably 588 or lower, bounce back up above the 589 mark, and then you could go ahead and take a trade. You don't want to see a close below that hammer, because this could go even lower. Now, one other benchmark for you to look at is really going to be the daily. So we're using that same swing point. And the same swing point in the daily goes, I can't remember the exact day in July. I won't go all the way back there because I have it already marked on my system here for you and anticipating your question. That is this, that the swing point high when that low was made was $6.47. We already know the low was $5.89. The daily volume happened to be 1.2 million shares. So there's a pretty good chance, because if you look at the last couple of days here, you've got 391,000 on April Fool's Day, April 1st, and 312, then 438, 680, 263 was yesterday. So price is starting to dry up. Now, because price, you did have a nice little bullish engulfing candle that formed out here on April 6th. But right now, the TAS market profile support level, $6.20, is acting as a resistance level. So that says you still have a pretty good chance to get that 589 level. If this starts to close above the daily market profile high, it would be unclear to me as to whether or not you'd want to step in on a long position. You might want this, if it doesn't get down to 589 but closes back above 647, then maybe that's the point where you would step in. You're right now kind of like in the middle zone. Does that make sense, as we're taking a look at this?
Yeah, that's exactly what I saw. I knew what the low was, and I was just wanting to know the volume characteristics, which you just went over. It's helpful, and it's just something I have my eye on. It looks like it might be something worth, if it does what you just said, to take a shot at. So
yeah, ultimately, if you step in on this trade here, if you get that test of 589 and closes back above it, that's really, from a technical trading, a volume characteristic standpoint, that's all you can ask for. Well, the second thing that you would then ask for is some sign of strength off of that bottom. That's what you would be looking for. But I would see no reason to not fire away. When I take a look at the volume on the weekly and the daily, I think if you're just patient right now, you very well may get that 589. In fact, you probably ought to, put in the limit order on that. As far as a stop is concerned, what I can tell you is that the average daily, let me do this on a different screen here, see what Diana shipping is. The average daily movement, average true range on this looks like it's 13 cents. So you need to be 13 cents times 1.272 or 13 cents times 1.618. And that's what I would use as my stop below the 589 level to fire away the trade like that.
Yeah, it makes perfect sense. So, all right, well, I appreciate it.
You bet.
And then I go take my morning hike and
that sounds wonderful. Be careful out there. That was Brent in Martinez, California. We're just taking a look at Diana Shipping. That's the trade setup, folks. If you're looking for the shippers, looking at the shippers, that's your trade setup. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar is ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 39 points, 7,949. S&P up about 5 at 2,086. Composite up 19 points at 49.69. Russell 2000 up 2 at 12.64. The DAX up 84. FTSE up 57. Goldilocks back $9, trading at $11.94. Silver off 32 cents at 16.13. Light sweet crude up 61 cents. We're going to take a look at bonds this morning. I normally don't do that. I'm not a big bond king out here, but there is a pattern. We just took a look at Diana Shipping with Brent and Martinez. That is a valid trade. There's no question about it. So, Brent, thanks so much for calling in and sharing that with our listeners. If you're one that is looking to get in on a shipper trade, now there's some others, 3 or 4 other shippers out there, but Diana Shipping, I believe, is one of the stronger. Of course, that is visiting its all-time lows down there at Swing Point. And so that's truly a valid trade, but you've got to use a stop. Just because it's a valid trade, you've got to use a stop there. There is another trade that looks like it is setting up inside of bonds. So for those of you, and I saw this and just kind of scanning through some charts here this morning, I saw a divergent pattern that we'll take a look at. But in the meantime, right now you got PTC Therapeutics leading the charge to the upside. That's up $6.60, nearly 10% this morning. Baidu up about 2.5%, up 5.57. Wynn Resorts up about $5. Express Scripts up 3. BioMarin Pharmaceuticals up a couple bucks. Walgreens out with numbers, I believe. They're up 2%, up $2. Las Vegas Sands up a couple of bucks out there. To the downside, Bed Bath & Beyond taking a bath this morning. It's off 3.5%. Looks like they probably are out with earnings. So we've got earnings season that has started in full swing out here. So we get to do that whole thing, which is beautiful. They were out with Bed Bath & Beyond net sales of $3.3 billion versus $3.2. So they grew the top line. Bottom line, I don't see it. Looks like bottom line was also growing, so they must be before giving a maybe they didn't beat estimates. I don't know, but in any event here, Altera down 2.5%. Netflix off a couple bucks. Unicure up 2.43. Auto Home off $1.30. Costco down $1.22 out here. Let's go first right to the bond trade. Now, the bond trade that I'm looking at, we're looking at the 30-year. I've got both the I thought I did have it. Oh, son of a gun. That's what happened. This morning, as I was putting things together here, I need to do something because I really wanted to have the continuous contract. I hope I didn't lose all that data. That would be a real bummer. Well, you'd have to watch me do it live on the set here. But I have been tracking this with the continuous contract, just to understand all of the different divergences. Yeah, okay, good. So we're there. Here's what I want to show you. I want to show you there's a pattern out here, and this just uses, so if you're looking at TigerTV, what we're looking at here is a continuous contract for bonds. In fact, let me do this on this chart here specifically. Let me get rid of the TAS boxes. So we just clean this up just a bit. Let me get rid of the moving average line out there. Okay, great. And in fact, I'm going to get rid of volume. I don't need this on this chart here to show you what I'm going to show you. Now, the 30-year Treasury has a unique pattern when you use the stochastic. This is standard 14.3 stochastic out here. And that divergence pattern is as follows. When it's making bottoms, the stochastic is making higher lows out here. Okay, so we can see that here. This is back in the time frame of June of 2014. Now, remember, when these patterns, when you want to really fire away, when you want the bulls and bears to give you a message, what they will do is they will go ahead and they will give you a bullish sign, bullish or bearish sign. In this case here, you're looking at a bottom, so you're looking for a bullish signal, bullish reversal candle out there. And you need to know which candles, and you need to understand the strength of a candle when you take a look at it. To really, it's a subtlety, but it's a subtlety where all of a sudden when you see this, you all of a sudden realize that you now are in more control of understanding the message. You don't control the markets, but you understand the message of the markets, and that's really key. Likewise, when the stochastic is making higher lows, as it did back here in August of 2014. Yet price was moving higher, a little gap down out here. You then saw, shorting opportunities. You can see there are several. I've got 2, 4, 6, with the sixth one right now being the current divergent pattern. And that's what I first noticed here when I took a look at the divergent pattern. I took a look at the stochastic when it made its highest high. That was on March 24th. We've seen price move just a tad higher out here into the April 3rd time frame. Now I'm going to switch over to the current contract because that's what's really important to take a look at. This gap here, this was we're not going to go into that and so forth, but I do want you to notice here. What I want you to notice is the following. Number one, we're up near the highs out here. We've got a stochastic where we've got a descending top, so lower high out here, with price moving higher. That's a divergence. You do have this bearish engulfing candle that occurred right here on April the 6th. So it's a warning sign. Now, I put this little yellow dashed line across my screen out here. This little dashed line is the 50% level of the stochastic. We can see that price got down very close to that. Yesterday, it got down to a reading of 51.53. Because we're up near the highs out here, what I'm going to say is if that stochastic, and this is if you trade the TLT, TBT, whatever it is, if we see the stochastic close below that 50 level, to me, that's a signal that there is at least a short-term change in trend that is going on inside of the market. Now let's go take a look at the current contract. So here's the current contract. In this case here, we're going to go ahead and we're going to leave the TAS market profiles. You can see the same pattern out here, right? You can see where prices moved higher. You can see we're on that 14.3 stochastic. We've got a lower high. You can see we're trading right at about that 50 level. You're at 52.38 out there. So if you see it close below the 50 level, to me, that is a message of a change in trend, some type of retracement. Hey, you can just use the TAS 162 and 22 seconds out here. If you do that, you see it close below that. That also would be giving you a message of going short the bonds. Now, where does this say that the price moves to? It doesn't. All you have to do then is just start using retracement levels out here. You'd look at the 0.618, 0.786 areas. You'd be looking for, bullish reversal signals, things of that sort. So with regard to the 30-year, where most people don't want to call any kind of short-term top out here, hey, this is a pattern that is so valid inside of the market. It doesn't happen that often, as we took a look at the continuous contract. But when it does happen, you have to pay attention. There is no signal just yet to take a short in it. That's the key. You got to be patient. It's like going to a fishing hole out there. You've got to be patient out here. But there is a signal that says, don't be surprised. Don't be surprised if we actually see bonds begin to pull back. Why? I don't know. But it's a pattern worth. And then actually what you could actually see out here, which would blow everybody's mind, is this could actually be an A to B equals CD to the downside. Your A point being up here at the high on January 30th and your B point being down here at March 6th. I am not saying that's going to happen, but one thing at a time. The one thing at a time is be watching. So if you're long in the trade out here, this is very cool. Maybe you're long TLT. Now you have something to be watching out here to say, hey, if we see, go ahead and put this chart on your screen out there. I don't know that it really works the same on the TLT. I'm not going to go explore that. I think I've spent 5 minutes on this. That's probably plenty for you to be aware of a potential trade that is out there in the case of the bonds out there. Let's go take a look at the rest of the markets now. So you've got the Dow's up 38, the S&P is up 4. It's going to be tough today for the markets to really hold any of their gains out here. It's going to be tough because you got the euro Japanese yen trading to the downside. We've been gradually drifting lower out here, so it's been impressive what the market has done. But the euro yen is a currency pair that is the carry trade inside the markets out here, inside the U.S. market at least. And when this trade's lower, it's just a headwind. Doesn't mean that the markets can't gradually move a bit higher, but it's a headwind. You prefer not to see that in the markets out here. So there's a headwind out there. The rest of the markets worldwide, they really don't give a darn out here. If I take a look at the VIX index, let's go see what it's doing. It's trading still below the 50-day. There's your other side of the liquidity gauge. When you trade below the 50-day exponential moving average, which is where the VIX has been for the last 7-8 trading sessions, it tells you that there's still liquidity inside of the U.S. Stock market. So there's your yin and your yang out there. Now let's go see if we can find some other stocks, see what they're doing. Let's go take a look at the stocks that are moving to the upside and to the downside. Let's look at Bed Bath & Beyond. They were out with the numbers down 5% here this morning. See what kind of volume is behind the move. So far, about 1.5 million shares. Let's go see what swing point or where this thing is really trading into. Now, this is looks like it's pulling back into the swing point from January 16th, 2.1 million shares. You've done 1.5 million shares. You're trading inside that level right now. You're not. I take that back. The high is 73.65. You're at 73.95 right now. If you close inside 73.67, you're certainly going to have the volume, which would suggest a test of 72.31. We can see a TAS market profile support level, which thus far has held a support, which is 73.54. So that's just another benchmark, another area to be paying attention to. Bed Bath & Beyond. It hasn't exactly fallen apart. It doesn't look too bad out here, with the exception of this volume off of the top. So maybe Bed Bath & Beyond. Volume off the top, by the way, that took place on January 9th. It was a doozy. That doozy was 11.7 million shares. So really, what we can say about Bed Bath & Beyond, it's in a consolidation pattern. And that consolidation pattern is as follows. It's somewhere between, you'd say I'd have to say, come on, there you go, between 71 and 79 out there. So you got about an $8-ish type consolidation inside Bed Bath & Beyond. You don't want to see it close below 71.35. That is most certain. It'll be $9 to the downside out here. Let's take a look at Baidu. Baidu's up $6. I don't see any news on it. If we take a look at Baidu, Baidu's now getting ready to bust through its descending price channel. Baidu is trying to change its trend out here. Baidu may be a buy if, in fact, it can close above the descending trend line. That's the yellow diagonal line going across my screen. So you got a couple of different areas. You've got your descending price channel that is trying to close above, and you've got the top of your TAS box at 211.79. I think we covered this a couple days ago because we saw that nice, well, maybe it was yesterday. We saw that nice volume spike yesterday, and we said, hey, that's where price will head to. Now the question is it going to just be a spike and the body of the candle closes back, underneath that little level? Or is it something more than that? And if it does close where it's at right now, 219.58, you've got a breakout inside of Baidu. Where does it say Baidu would move to? Again, we just use Fibonacci retracements. You're right now at the 0.382, the dead cat bounce, which is 219.95. 232.19 would be the next stop if it can close above this level here where it's trading right now. That's on Baidu. Biogen, we know Biogen's got a high volume high. That's where it wants to trade to. It's up about 0.9% out here. Biogen right now, yesterday had volume to the upside of 1.5 million shares. It's got this high volume high out here at between 439.90 and 431.33 out here. Once it clears 437, it's got the freedom to run all the way up to that swing point. That is on Biogen. We take a look at Express Scripts. ESRX is the ticker symbol. Up $4.50, up 5% this morning. A nice move here. This is taken on its swing point high, maybe the all-time high, February 24th, 2015. 5.9 million shares so far this morning in only 17 moments of trading. That is got volume of 1.3 million shares out here. So it's trying to break out of this little consolidation, and we'll set up an A to B equals CD. That A to B equals CD pattern, that will give us a price target of approximately A point being down here on October 16th. It would be nice if, there we go. And your B point that I'm going to use is going to be the high on December 9th. The bottom of the consolidation was down here on December 17th. Your 1-to-1 A to B equals CD, and this is what I would expect it to do, is get to about 95.83. You are at 88.92 as we speak right now. So those are a number of stocks that are moving to the upside. Let's go take a look at well, we looked at Bed Bath & Beyond. That was to the downside. Let's take a look at Shire PLC. SHPG is the ticker symbol out here. Moving down this morning, volume behind the move. It's a leader dollar-wise, $4.60. This has been a heck of a move out here. It's actually closed a huge window that was formed with 30 million shares to the downside. I don't know what that was, but that was bad news. That's for sure. Where's this stock chart headed to? Great question. Great question. At this stage here, right now, it's found support of its TAS market profile high, which is at the 240, 145 level. I'd say if it cracks below that, it probably heads back and tests the swing point from a few days ago, back on April the 6th, down around the 226 type area. Let's take a look at Netflix. Let's go see what NFLX is doing out here. Netflix had a nice trading day yesterday, just giving back some of its gains. Actually, Netflix looks like more of a buy than a sell to me. Netflix had that big sign of strength back here on January 21st. It never got back to test that the bottom of that level. It doesn't always do that. That would have been, that's at the 401.87. That would have been your nice mark here for a buy, for a potential buy out here, especially if it held. Hey, guess what? It's held thus far. It's up above its TAS market profile. This thing is going to probably make a run for its highs. The next stop, price-wise, is going to be $457.28. That is on Netflix, NFLX. Dow's up 25, S&P's up 3. Correct.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 28. S&P is down about 2 points. Composite is just slightly flat out here. As I mentioned, it's just like sailing into a big storm out here with the Euro-Japanese yen trading lower. Again, it's been drifting lower out here the past couple of days, so it's a big headwind. If we take a look at the other headwind, so we took a look at two potential trades for you. With regard to what the market is doing, let's take a look at the S&P futures. Just struggling here at resistance. This black horizontal line going across my screen out here. It's just simply major resistance inside of the ES Mini. And that's at a price point of about 2,078 and a quarter. Now, it's a 5-hour chart that we're looking at out here. Significant level of resistance. So you got that as a level of resistance. This has been in place ever since about 2 o'clock in the afternoon on March the 30th. We're at April the 9th. So that's how long this resistance line has been in place. Likewise, it's got support all the way down here at about the 2042 level. But the real support right now that it's been trading within since about 2 o'clock in the afternoon on April the 7th, so for the last couple of days, has been this 2066.75. So if you're trading this to the short side, you need to see it close below 2066.75. I'd say really use the bar back here at $2,300 on April the 7th, a close below 2064. Otherwise, you just are in a narrow, banded, tight trading range out here. Close below that, then you can see price move down to about 2053, maybe even the 2043 range out here. But this is what the market is trying to do. It's trying to bust up through this level on the 5-hour chart here. It's just a kiss, maybe a kiss and go on the ES Mini. And that's what's going on the 5-hour chart. If we take a look at the daily time frames, look at the summation index. New York Stock Exchange, still all bullish out here. The NASDAQ Composite daily chart, all bullish. Buyers are in control. Inside the Dow, all bullish. Summation indexes are all turned up. That says the trend is your friend. And that trend here at this stage of the game is still to the upside. You got to get that price oscillator below zero in order for the bears to come out. This is Steve Rhodes with TFNN. Have a great Thursday, folks. I'll be back with you at about 10 after. Stay tuned because Tom O'Brien has got his market update. Take care, folks.